going to show you how to use the Binance Futures trading platform. It is true that traders make a lot of money when trading Binance Futures contracts, and I am going to show you exactly how to do that. So you would have to watch this video to the end because there is a lot of vital information that you can't afford to miss. You know that if you can make a lot of money in a short time, that means you can also lose a lot of money in a short time. So I would advise you watch this video to the end. Before I start, I would like to say futures trading is meant for experienced traders. So you should only trade if you are an experienced trader. Now let's start. First of all, we would have to go to the futures icon right there. You click on futures. Now this is how your futures platform will look like. I am going to show you exactly how to use this interface right here. Now, as you can see, we have 0.00 USDT present in our wallet. Now, we would have to transfer USDT from our spot wallet to our USDT futures wallet. Once we do that, we'll be able to trade on the futures platform. Now, we would have to go to the wallet to transfer funds. Click on transfer right there. You would have to change it to USDM futures. What this shows right here is that you are about to transfer USDT from your spot wallet to your futures wallet. Now you would have to click on any amount. For example, in this video I am going to use $10. Now you click on transfer. As you can see right there, I have successfully transferred 10 USDT from my spot wallet. If you look at the right side of this platform, you would see the order books. This shows people that are willing to buy and willing to sell at different prices with different quantities. The way they do that is by these two tabs right here. As you can see, there is buy and sell. When you want to buy in futures, the term to use is long. That means you want to take a long position. And when you want to sell in futures, the term to use is short. That means you want to take a short position. And when you want to take any of this position, you can also use something called leverage. Now, when you use leverage, you would be making more money with the little capital you have present in your wallet. Now, let me show you how leverage works. For example, you have 1 Bitcoin and you are looking to borrow 9 additional Bitcoin. Entire position you will be having is 10 Bitcoin. So leverage is like you are borrowing a certain amount to add to your existing amount. So when you make profit, for example, you bought Bitcoin at around $46,000. So if you have 1 Bitcoin, that means you just have $46,000. But if you have 1 Bitcoin plus 9 Bitcoins, that is 10 Bitcoins, your entire position would be $460,000. When the price of 1 Bitcoin goes to $47,000, that means it will be 470,000 minus 460,000, and your profit would be 10,000. Just because Bitcoin gained $1,000, because of your using leverage, you would get 10 times the money. As you can see, you will get $10,000 for a $1,000 move. Now that is how leverage works. You need to know that as you can make profit like this, there is always a risk attached to it. And I'm going to show you later in this video what risk is attached to it and how you can manage that risk. So that is how leverage works. And you need to know there are different types of leverages. If you click on this 125x right there, click on this. Now when you click on it, you will see that you can adjust the leverage you want to use. If you want to use 25x leverage, what this means is that when the price of the asset you are trading goes up 1%, you would get 25% on your trade. Understand? Also, the same thing goes for 50x leverage. When the price goes up 1%, you get 50x on your trade. Also, the same thing for 100x leverage and above. Now you know that the more leverage you use, the more profit you get. Also, there's a disadvantage because the more leverage you use, the closer your liquidation price is. Understand? But I am going to show you all this later in this video. I am going to give you perfect examples of how to go about everything. Now let me show you how to short on futures. Now you will have to click on sell. Now when you click on sell, the strategy here is short selling. When you use short selling, you are making money when the price of the asset is going down. I'm going to show you exactly how that works right now. As you can see, you bought Bitcoin at around 46,400. Then the price of Bitcoin went to 60,000. That means you would have $60,000, right? Let me show you exactly how short selling works. Now, you bought at for 6,400, understand, and you are going to be selling at 60,000 on the dot. That means you already have 60,000 in cash. Now, imagine if when you have that 60,000, Bitcoin goes down to 50,000. So when Bitcoin goes down to 50,000 and you buy using this amount, so for example, now it will be 60,000 divided by 50,000. That means you will get 1.2 Bitcoin. As you can see, the profit here is 1.2 minus 1. As you can see, your profit is 0.2 Bitcoin. Now that's how short selling works. So as you can see, the price goes down, you still maintain the same 1 Bitcoin you had, and you are making profit because you short sell, you sold at a upper level and you bought back at a lower level. When this is happening, you are still going to be in a position. So it will be 0.2 times the current price at which you sold. Imagine you sold at 50,000 and you got extra Bitcoins of 0.2. As you can see, your profit will be $10,000 because you short sold. Understand? So that is how short selling works, and that is how people profit when the price of an asset goes down. Now let's go back to the Binance app. Now you know how short selling works. Let's say in this video, I don't want to trade Bitcoin right now. I want to trade, let's say, Bitcoin Cash. Understand? I want to trade Bitcoin Cash in this video. I would have to click on this BTC USDT up there. When you click on it, you can select all other coins you want to get here. Let's click on Bitcoin Cash. Now I want to enter a position in Bitcoin Cash. Now in Binance Futures, you don't enter any trade blindly. You must have done technical analysis before entering any trade, because if you enter any trade blindly, the market will remove you blindly. So you don't do that. You don't enter without having any plan at all. You have to make your plans, draw your chart, and enter that trade when you are in a position of strength. So when you're in a position of strength, it is very easy for you to navigate your way to making profit. So you'd have to click on the price chart right there. You can use all these tools right here to do your technical analysis before entering a trade. Once you know how to do this, now let's go back. Now I want to enter a position. As you can see, I want to buy 0.1 of Bitcoin Cash at around 465. Then I will enter my order right here. I'll click on buy long, confirm. So when I click on buy long, as you can see, I have already entered my order. Understand? So when you scroll down here, you would see that my order is opened. As you can see, open orders, the price has to go down to 465 before my order would be executed. Now the reason why it's like this is because I am on the limit tab. But if I click on market and I want to execute my trade instantly, I would have to click on market. As you can see, I cannot select my price at which I want to buy. It will just buy from the existing order book to select the best available offer and just give it to me. Let me show you something now. For example, if I'm using 20x leverage and I want to buy 0.1, if you check the cost, that means how much it will cost me to open this position, you will see that it will cost me just 2.38 USDT to open this position. That's when I'm using 20x leverage. Now if I change to 50x leverage, I want to show you how much it will cost me. As you can see, it will cost me just 0.99 to open this position. The reason why this is so is because as you are increasing your leverage, it will cost you less to open a position. I'm going to show you one more thing later in this video, but first let us put in an order, a buy order. Now if you look at this, I want to buy 0.1 at market price, so I will have to click on buy long. Remember, this is a blind trade. I have not done any technical analysis. I am just placing a trade for the purpose of this video. Confirm. So when your position is open, as you can see, there are different things right here. When you look at the size, you will notice that that is the amount at which I bought. When you look at the margin, that is the amount it is costing me right now to keep this position open. Understand? So as you can see, it just cost me 0.94 USDT to keep this position open. If you look at the entry price right there, I entered at around 469.62. The market price is the current price of the asset. The current price is around 469.77. The market hasn't even moved like that, but the return on equity is already up because I am using leverage. Right now I am on the 50x leverage. If you look at my liquidation price right there, you will notice that it is around 372.12. If the price of Bitcoin Cash decides to go down to 372.12, I would lose my money. Like, I would lose everything. In this trade right now, if I want to select my take profit and my stop loss, I would have to click on stop profit and loss. Now when I click on this, I can select the price at which I want to take profit or the price at which I want to stop my losses. Let's say on this trade I want to take profit at around 1000. The estimated profit you'll be getting would be 53.03 USDT. That means this would be the profit I would be making if I should close my trade at around 1000 USDT per Bitcoin Cash. So if I confirm this, confirm sell, you would notice that my order would be in the open orders section. As you can see, it is already there that when the price goes to 1000, my order would be executed. And for your stop loss, you would have to go back to the same place, click on stop profit and loss. I want to put my stop loss at around 460. Now when I put my stop loss at around 460, as you can see, the estimated PNL would be minus 0.96 USDT. Price goes down to 460, I would be losing this amount. Understand? Then I will click on confirm sell. Now when you are in the open order section, you will notice that there are two orders that are pending. Understand? One order is when you sell at the top and make profit. The second order is when you sell below the entry price. Understand? When you sell below the entry price, you take a loss. In futures trading, there are two types of margin. Margin is distance, and for you to add or subtract to that distance, you would have to increase your amount. That means increase your position holding. So that is how margin works. Understand? So I said there are two types of margins in trading. There is cross margin and isolated margin. If I scroll up, you would see this cross right here. When you click on it, you can select between cross margin and isolated margin. Now what isolated margin means is that when you place a trade, understand, it will take in a specific amount. For example, let's say it will cost you 1 USDT to make that trade. It will take in just that 1 USDT. Understand? When it takes in that 1 USDT, it will use only that 1 USDT to trade. When it uses that 1 USDT to trade, if you get liquidated, it will only take that 1 USDT. It will not take more amount from your entire holdings in your wallet. It will just take that 1 USDT when you use isolated margin. Understand? But when you use cross margin is using the entire amount in your futures wallet. That means when you have enough money in your futures wallet, it will use the entire amount just to keep that position open. When you use cross margin, your liquidation price would be far away from your entry price because it is using your entire holdings to keep that position alive. I am going to show you exactly how this works. Pay attention to the liquidation price. Right here, the liquidation price is 3.72 and my available balance is 9.42. Let's say I want to reduce my available balance. As you can see, I've taken away 5 USDT from my available balance. Now if you scroll down to your liquidation price, you will notice that your liquidation price has gone up. Before it was 372, now it is at 422. You understand? Now this is how margin works. I took away some amount, and when I took away some amount, my margin got reduced. Now let me close this trade. Right now, let me close this trade. I'm going to show you something else. Now if you want to close this trade, you just click on close position. I'll just click on confirm. It will close on market price. Confirm sell. Now when I close my position, as you can see, all pending orders would be closed. Now as you can see, my pending orders are closed, and as you can see, my money is present in my wallet. Let us transfer back our full amount. We've transferred back our full amount, and as you can see, we started with 10 USDT. As you can see, we've gained plus 0.4 USDT. Now if we switch back to isolated margin, confirm, Right now I am on isolated margin. I want to buy 0.1 on market price using isolated margin. As you can see, I'm using 0.96 in the isolated margin, and my liquidation price is around 467.66. When you're using isolated margin, you can also increase your margin. If you click on the margin right there, you can increase your margin with the available balance you have. For example, I want to increase my margin by 1 USDT, confirm. As you can see, my liquidation price has dropped. Now let's close this position. If you look at the funding countdown section, you would notice two things. You would notice a percentage and a timing. When the funding rate, that means the percentage, is positive, Binance is going to be paying you small amount when you are in a short position, when the funding rate is positive. But when you are in a long position, that means a buy position, when the funding rate is positive, you would be deducted some amount. That means you'll be deducted small fees. Also, when the funding rate is negative and you are in a long position, that means you will be benefiting from fees. That means Binance will be paying you small amount of money. But when it is negative and you are in a short position, that means you would be giving out fees. Understand? You'll be giving out fees. Now, what the countdown means is that there are 3 times at which you pay fees in a day. Understand? Now, since we are in Nigeria, the 3 times are 1 a.m. in the morning, 9 a.m. in the morning, and 5 p.m. in the evening. So these 3 times are the 3 times at which you would be either funded or deducted in fees. Understand? So when you are trading Binance futures, you pay fees or the fees get paid to you. You also need to know one more thing before we end this video. Before you trade using Binance futures, you can also use your calculator. You would have to click on the 3 dots right there and you'd have to select calculator. Using your calculator, you can calculate your PNL, you can calculate your target price, and you can calculate your liquidation price. This tool right here on Binance is very helpful to planning. This is exactly how to use the Binance futures trading platform. If you truly enjoyed this video so far, please leave a like and try subscribe. It really means a lot and I really appreciate it if you do. With that said, this is going to be it for this video and I will see you in the next video. Goodbye.